Hello and welcome to Trade Routes at PCB. This is your update on international trade for August 6th, 2025. A lot has happened since our last recording, and we're here to offer viewers valuable insight into your questions and help you navigate today's evolving trade landscape. I'm your host, Gina Cruz, and today I'm joined by two of our experts in the world of international trade, Breanna Leininger, Vice President of U.S. Operations,
Hello.
and Misty Gibbins, our Senior Trade U.S. Advisor.
Great to be back.
Yeah, thanks for having us.
So, Breanna, can you give us an overview of where we are now, including the pause or pauses and current environment on global tariffs?
Oh, that's a big question to unpack, that's for sure. So the reciprocal rates went into effect. They were announced on the 31st. They go into effect this week. In many cases, some increased rates, in some cases where they've been able to make a deal, there's a bit more of a fixed rate. There has been a pause issued for China and Mexico while they work through those trade deals. And we saw a few new orders, such as the copper order and the increase from 25% to 35% on Canadian goods for anything that doesn't qualify under USMCA or CUSMA.
Perfect. And Misty, can you give an update on the modification of the reciprocal tariffs currently in place, as well as the intended end to the de minimis exemptions, what that means going forward?
The newly announced reciprocal tariff rates for most countries take effect on August the 7th, as Bree mentioned. However, USMCA compliant goods remain exempt from the tariffs tied to fentanyl, reciprocal actions, and Section 232 auto duties. However, non-USMCA goods from Canada will now face a 35% IEEPA fentanyl-related tariff, up from the previous 25%, unless they fall under the other categories like auto and auto parts, which are under Section 232 at 25%, or steel and aluminum at 50%. Meanwhile, Mexico and China remain under that pause. Individually announced country rates are ranging from 10 to 40%, with the exception of Brazil, who is at 50%. And no country will receive a rate of less than 10%, except, and there's always an exception, the 27 member countries of the European Union. Their trade deal is quite interesting in that the reciprocal rate will depend on the ordinary tariff rate for where the goods are classified based on the tariff classification. So if the ordinary duty rate is less than 15%, your reciprocal rate will be the difference between that ordinary rate and 15%. However, if the ordinary tariff rate is over 15% or more, there will be no reciprocal rate. You will just pay the ordinary tariff rate in effect for that tariff classification. So I found that quite interesting.
Would that be two lines of classification then?
Everything is really basically going to have more than one tariff number, whether it be more than one tariff number on one line or multiple lines, so that we can split out like Section 232 content from the non-metal content, the non-Section 232 content. So yeah, sometimes it'll be multiple tariff lines, sometimes it will be multiple tariff numbers on this.
And I think it's important to note, like, there is been a huge increase in kind of what the average tariff rate is into the US, right? It can range between 15.9 to 17%. So as Misty was saying, although you may have the base of 10, depending on what the commodity is, there could be something else that also impacts that tariff rate. And so I would prepare kind of for that average as being a little bit of the best news, but really drill into those commodities, those countries, and see where you land. Another thing I would recommend is this is just one of many trade actions we've seen so far this year, right? So get yourself set in what you need to do now, and then also make sure that you're keeping an eye out for things as they fluctuate, because they will fluctuate. I think one thing it's important to note on those reciprocals, a lot of those rates were set, but there's still not a deal in place. And even the White House has said, okay, this is what it is right now, but depending on how we negotiate, that rate could change. It can go up, it could go down, it could stay the same. We don't really know. So I wouldn't take anything on that reciprocal list right now as fixed, as, truth, and that's what it's going to be, in the long run. I think it's just what it is right now today, why this continues to unfold.
So don't write a 2-year contract based on this rate.
No. With regards to the de minimis provision, which was
Yes.
vital to e-commerce, it allowed the entry of qualifying goods valued at less than $800 to enter the United States duty-free. Duty, taxes, and fees would not be charged on those. It is set to expire on August 29th for all countries. It's already expired for China, but now it's set to expire for all countries. And, that means that now those goods will be required to be entered, and duties, taxes, and fees will be paid just like any other shipment. Hopefully, the majority of those will be able to be entered as an informal entry, which will reduce some of the fees that are associated with it. But there are certain exceptions to that, like alcohol and goods that are subject to other trade remedies, such as anti-dumping and countervailing duties.
So the good rule of thumb is if there's another government agency involved, it's not going to go as an informal?
If there's other provisional tariffs that
Provisional
apply
tariffs.
to it, like anti-dumping and countervailing, then it won't be able to go under that informal value type of entry.
There's going to be very few goods that probably hit that ability to file informal. Most are probably going to fall under formal because of the broad-reaching tariff action. If you run into a partner government agency, that's not necessarily going to impact whether it's an informal or a formal. Of course, there's always outliers, right? There's always certain cases where it will, but that's not really, partner government agency isn't going to be a determining factor. A tariff order is going to be a determining factor in whether you're able to file informal or formal. And for context, an informal entry is anything under $2,500 and a formal entry is anything over $2,500. However, if you have a $50 shipment now that used to sail through, under a type 86 entry, under section 321, and it hits a tariff action, it's most likely going to be a forced formal entry. So that means you're paying, not only are you paying full duties, but if you're used to kind of filing in that section 321 or type 86 entry, be ready to get a lot more information for your entry, a lot more detailed paperwork. The process is considerably thicker. It's not impossible. People file these every single day. They're filing them right now, but it's more than just a duty component. And I think that's important to note.
And the couriers will be asking for the same thing as well.
Correct.
Okay. So our goal today was to provide our viewers with some insight into some of the reoccurring questions we're receiving and to keep them up to date in the most recent announcements and what they could mean for the importer. So let's start with some of the questions that have been coming into our hotline, which for listeners is 888-908-6638, or email us at tariffquestions@pcbglobaltrade.com. So Misty, Bree, will goods qualifying under USMCA or CUSMA continue to be exempt from the updated 35%?
Yeah, as we mentioned earlier, it really was just a move from 25% to 35%. So if you had a USMCA or CUSMA allowance that, allowed you not to pay that 25%, you're going to find the same experience with the 35%. However, just because it qualifies for USMCA does not mean that it does not hit another tariff order, right? It might have skirted this 25 to 35% IEEPA order, but that doesn't necessarily mean that it's not going to be subject to one of the section 232s, which is the copper, the steel, the aluminum, or anti-dumping, or some other order out there that could specifically impact that good. However, if for the last few months you have had the experience with your product that it does qualify and it doesn't, have any of that metal content or one of those other orders, you're going to continue to feel the same experience. If you are one of those who did pay the 25% and now you're paying 35%, one thing I do want to note to you is that make sure you're keeping an eye on your bond. Make sure that you're keeping an eye on that bond limit. That's a pretty big jump, 10%. Definitely everyone's feeling it in their margins and their prices and kind of their operating costs right now. But what you don't want to have happen is you've used up all of your bond because you've had a base $50,000 bond and now your shipments are held up. So really keep an eye on your bond saturation, how much duty you've paid, and be ahead of the curve on kind of getting those bond increases. That's going to help you continue to navigate this environment.
Tell us again what the bond is based on.
So bond is required for all goods coming into the U.S. It ensures the revenue due to the government. So basically, the U.S. government says, yes, you can import goods into the U.S., but if you're paying duty, we want an insurance policy to make sure that we're going to get our duty. And so that can be applied in different ways. You can get a continuous bond, which I usually recommend. Misty, I know you usually recommend going for the continuous bond route because that covers you for a year from the date of issue. Some people get it on a per transaction bond. Those, although appear cheaper up front, can actually be enormously expensive if your importing activity picks up. Like maybe your product takes off, right? And you start to have more shipments into the US. It's just get the continuous bond. It's going to save you some headache, that's for sure.
And another thing to consider there is that the bond has to cover 10% of the duties, taxes, and fees due in a year period, so in a 12-month period. And that's why you have to keep an eye on what your duties are, because when you add 10%, that bond could become saturated quite quickly.
Very quickly.
What do you know about the intended increase to anti-dumping and countervailing duties on Canadian softwood lumber?
Well, the final anti-dumping rate for most Canadian companies not individually reviewed has jumped from 7.66% to 20.56%. As for countervailing duties, they have not yet been announced. They're due out at the end of this week. And the preliminary estimate suggests that the rate will be increased to 14.38%, which is a total combined AD/CVD rate, makes it a steep 34.94%, when previously it was more in the 20% range with the combined rate. Now it's going to be a combined rate of 34.94.
Okay. With de minimis coming to an end August 29th, how should importers prepare who've been using that Section 321 and T86 entry option?
It depends on the mode of transportation, that's for sure, on what they're going to do. We did talk a little bit of kind of informal entry. Misty, I know you had some stuff kind of on that breakdown of duty to kind of give that additional context.
Yeah, if they come down via commercial carrier, they would need to just be entered as a regular entry, and whenever possible, have that be an informal entry type if it qualifies. But the entry would need to be made by a broker or another party authorized to do so, and would require the payment of any applicable duties, taxes, and fees. However, if they come in via postal service, this is where it gets a little bit tricky. The duty would be equal to the effective IEEPA tariff rate applicable to the country of origin based on the value of each dutiable package containing goods entered for consumption, or a specific duty assessed on each package containing goods based on the IEEPA rate for that country of origin. So it's on a graduated rate. If the country has an effective IEEPA rate of between less than 16%, they will pay $80 per package. If the country has an effective IEEPA rate of between 16 and 25%, they're going to be paying $160 per package. And countries with an effective IEEPA rate of over 25% will be subject to a $200 per package rate. Now, those are two options, right? But the thing is that you don't have the option to select those. The transportation company entering the international postal shipments will be the one responsible for choosing the method which will apply. So you're kind of at the mercy of that transportation company that is responsible for entering those international postal shipments.
Okay, I'm trying to get my mind around that. So if I can reiterate, if it goes with a postal service and it's from China, you're going to have that $80 or $120 per shipment.
No. So if, for instance, if it's China, they have a higher rate. So they're going to be looking at $200 per item, not per package, not per shipment. It's per item.
Okay.
So if you have 3 shirts, you're going to be paying $600. So if you have, say, one that's from the European Union, they have a 15% rate, you're going to fall in that $80 per item. Right. And then anyone who's in that range, 16 to 25% on that tariff IEEPA list, they're going to be paying that $160. So it's a graduated. Basically, it steps up depending on the level of trade action or a tariff imposement that country received under the order. So part of this too is, the negotiation tactic, right? Because e-commerce is huge, and especially after COVID and things like that, e-commerce has really become enormous. And so in a way, this is kind of like a bargaining, and a lot of those move through the postal system. And so this is to really target in on those countries. So as Misty said, when it's going to be dependent on the carrier to make that selection of where you fall, that's where really making sure that you understand the country and for which you're buying the goods from is going to determine. Because if the carrier's picking up in China and you thought the product was, say, coming from France and it wasn't, you're going to be seeing 200 instead of the rate for France. And so that's where this gets a little bit tricky, and kind of you want to know where your products are coming from if you're planning for that cost. On de minimis, there is a $200 allowance for personal goods. And, some of the questions we've got, well, I'll say it's a gift, right? That personal goods, those have to be with you. You have to be personally moving with those goods in order to claim that 200. If not, then you are going to be faced with one of these tariff actions. And so the rate was really high for the US at 800. I think we had one of the highest rates, if not the highest rate. And there had been push for a long time to move it back to 250 or 200, lower it, get it kind of in line with what other countries have done. And what they've done here instead is they've just cut it right off at the legs and say no de minimis. Everything is going to be subject unless you're taking your goods yourself. They did give an allowance for that, $200 per person. But there was a lot of people that were claiming personal importations, or they were claiming low value on goods that were not low value. And so this is really just to close that loophole and say no more. Everything's
if you're driving through or flying through, that's where you do that personal importation.
Yeah.
But not mailed with a courier carrier. That's gone.
Yeah.
So one of the things that was interesting when I was reading through the proclamation is that be prepared to know what the country of origin of the goods in the package are, because you're going to have to be declaring that with your documentation when you mail those shipments. So you're going to want to know before you get it all taped up. You're going to want to know what the country of origin, and that means where it was manufactured, not just where you bought it from
or shipped it from.
And on country of origin, I think that's one topic. Number one, it's one of the top things customs enforces on is country of origin declaration and country of origin marking. But it is misunderstood even to some people who have been, trading goods for a long time, and that the origin of the good is where it was born, right? Where it was produced, grown, manufactured, or had some, the last significant transformation that changed the essential character of the good. It's not where it's shipped. And we did see that in the orders where they talked about transshipments and really closing that loop as well, is because, often people would send stuff from one country to another. And unfortunately, in most cases, the person making the entry, they might have not known it took that transshipment journey until they got it. And so that's why first off is really knowing what that country of origin is, because they're going to be looking for it. Customs at their core, they were born to be a revenue collecting agency, and they're really navigating back to that original purpose, and they're looking for lost revenue.
And they can go back. How many years can they go back and look at files and reassess what you paid at the time of entry?
They can go back 5 years.
5 years.
Past liquidation.
Right. So it's not just you may have got away with it now. It may come back for 5 years. So keep your records, know what you've entered.
That's only on formal entries. Informal entries, I think you have a little bit more of a grace period.
A good example of that, which was one of the topics we talked about earlier, was the softwood lumber and those rates being reset, because really they were looking back. If you imported lumber in 2023, you're probably going to be seeing a duty increase bill. Right. So I think sometimes people think that it's just on the anti-dumping or those ones where they're trying to figure out what the rate is, but it's not. They can go back that full 5 years. And if you have an investigation, they can get even deeper into that. So they're looking for lost revenue. So do not try to skirt the rules.
Record keeping. Keep your records.
Yeah.
Know where your stuff is if they do come, because they're going to be asking questions. We're going to see in my opinion, we're going to see a higher increase in CF28s, 29, and reviews for sure.
We already have.
We're already seeing a historical amount of audits, requests for information, investigations at the booth when the goods arrive. Like we're already seeing that increased enforcement across the board. We have been seeing it for a few months now. I think on records, that's another thing that people struggle to define. So when we say keep your records, it's not just your invoice and your bill of lading. It's your production records. It's your sourcing records. It's your business records that went into manufacturing, procuring, or obtaining that product. It's who manufactured it, where did it come from, what labor went into it. Like you want the life story, the memoir, the full uncut memoir of that product, that is your record. It's not just your bill of lading. It's not just your invoice. It's everything that went into the information that's presented on that. And that's what customs is asking for. They're not asking, please provide your USMCA, please provide your invoice. They're asking for, prove to us why this is a qualifying good.
Yeah.
They're also looking through there is your valuation, your method of valuation, how you value the goods, and can you prove that that was the right method of valuation for the good?
And we talk about that as being one of the building blocks in some of the other education sessions. So, I mean, not to shamefully plug, but if you haven't seen any of them, I highly recommend that you do, because we talk about how country of origin, tariff classification, valuation, those records are really the foundation. If one of those things are off, it could be really costly. Don't go duty shopping in the tariff book. Don't try and look for the lower rate and skirt through like that, because it's not a matter of if it gets identified, it's when, right?
Yeah.
Customs is using all sorts of techie tools to track these things down. And so if that happens, you're going to get a duty increase bill plus interest plus penalty, most likely.
Right. And your reputation.
Plus the fees of all the experts that you have to pay to untangle the mess. So just can't stress enough, like just file it the way it's supposed to be filed and keep what you need to keep, and just let the rest go through. People are still importing, and I want to highlight that too, right?
Yeah.
More cautiously, like know your stuff. Make friends with your broker. If your broker isn't asking questions, find out why they're not asking questions. Yeah.
And if your suppliers are not giving you the details that you need, right? If they're being a little cagey about it, then really look at those relationships. Like the best way to navigate an environment like this is through solid partnership with trusted partners.
Yeah.
That's how everyone survives this. And that's how people can be successful, even in what feels like, a rocky trade environment.
Perfect. And just going to, back you up with it wasn't a shameful plug at all. We have free webinars all the way back to valuation, Incoterms. Those are all free. So use those free tools. Then go to our trade experts, Misty being one of them. Once you know the questions to ask from taking the free webinars, then go to Misty with the questions so you can formulate all the answers and backup that you need. And with that, thank you for joining me today for this discussion on international trade. There was a lot there, but it was very informative. I look forward to your updates in the days and months to come, which I think we'll have days with the new announcements coming out. If you have any questions or comments, please feel free to reach out to us at tariffquestions@pcbglobaltrade.com. It could be answered here next time. As always, don't forget to subscribe to our newsletter and follow us on LinkedIn and Facebook so you don't miss any updates. Please hit that like and subscribe button below. And until next time, my name is Gina Cruz. This is Trade Roots, and thank you for being with us.